Yo, everybody, back at it once again. Favorite entrepreneur, your boy, official Tyree Samuels. So today, we're going to pick it back right back off where we left off. So I'm going to be going over yet again another setup that I took advantage of that you guys can also take advantage of. And I'm going to be going over exactly why I took it, how I took it, and how I ended up playing out. So if you guys are interested to be able to see, let me wait for you guys on the next clip. I'll see you soon. Peace. Yo, everybody, back at it once again. Favorite entrepreneur, your boy, official Tyree Samuels, right? Now, before y'all go any further, y'all already know the routine. Go ahead and, start off by hitting that subscribe button so you can stay up to date every single time I drop a new video. Also, while you're at it, don't be shy. Let me go ahead and get you to tap on that thumbs up, and let me go ahead and get you to hit that like button that's conveniently placed right to the next of it so that YouTube knows anytime y'all watch the video, y'all appreciate it. And if you want to leave a comment, I would appreciate that too. I'm open to constructive criticism. Just don't get out of pocket, okay? Now, with that being said, as I mentioned in the clip earlier, we're going to be going back over what we've been doing, over the course of the past couple of weeks. I'm going to be going over, some opportunities in the market that I actually had the advantage and the due diligence of being able to take advantage of. So this is what we're about to do, okay? Without any further ado, we're about to go ahead and dive into it. So as y'all saw in the thumbnail, we're going to be talking about GBP AUD, okay? GBP AUD, as you guys can see, it was a shorting opportunity. Now, from how you see what the market currently looks like, no, it did not hit stop loss. We actually ended up hitting our first target and then ended up reversing. But obviously at that point, we took partials and we obviously secured break even. So let's go ahead and get down to the nitty gritty. So the thing I want to do is I want to go ahead and take y'all back to where I originally started as far as what the setup looked like whenever I initially saw it. So the things that I've now shown you guys time and time again from watching me trade is I trade pretty much the same kind of way. So one of the first indicators that I like to be able to use is going to be something like the RSI. So I told you guys, as I'm looking through my pairs, I'm usually focusing on the 1 hour. The 1 hour is pretty much, in my opinion, all I really need to be able to find a verified setup that's going to, do what I wanted to do. So at this point, if you guys know anything about how I teach you guys how to use the RSI, I told you guys, anytime the market comes outside of this purple box, that means that we can look for opportunity, right, for the market to come back in the box. Now, what exactly does that mean? So if the market comes outside of the box upward, then that means in order to come back in the purple box, it has to come down. So on the actual chart, that would mean that it would be a selling opportunity, okay? If the market were to do something like this, where it came outside of the box on the lower portion, in order to go back in the box, it has to go up. So in a similar situation, if you guys are looking at where the market was when the RSI was below the box, you can see that in order for the RSI to come back in the box, the market obviously followed suit and it started going up. So the thing that I initially noticed was the market is outside of the box on the upside. So that means in order for it to come back in the box, it is an opportunity for a sell. Now that's really going to be one of my main things that I look for in order to really start diving in. So now that I've gotten that, we're about to go ahead and do it. We're about to go ahead and do it to it with the fluid. I don't know what I just said. So basically, the next thing I always tell people is I like to be able to see that the market gave me, some type of impulse move. Okay. The impulse move doesn't have to be gigantic. It doesn't necessarily have to be a specific kind of pip count or anything like that. For this specific move, we actually saw that the market went about 66 pips, which, keep in mind, GBP AUD is one of those pairs that moves. Okay. So it is a good amount of pips. For another currency pair that might be a whole lot. For GBP AUD, it's pretty cool. You know what I'm saying? So the next thing from here, right? So now I've seen that the RSI is in the extremes. Now I see that we've gotten some sort of impulse move. The next thing that I told you guys, for me, is pretty straightforward. From the 1 hour all the way to the daily, I'm going to now start flipping through all of these hourly time frames to see if I can find an institutional candle that I personally like. It might not be an institutional candle that the next person likes, but for me, back testing, this is what I like to see. So I'm going to start flipping. Now, without going any further, because I've already seen the setup play out, the 4 hour ended up being the time frame with the candle that I felt most comfortable with being able to go ahead and start looking at as far as a possible entry candle. Okay. So what I like to look for is an engulfing or an institutional candle, which is exactly, what this is right here. So what exactly does that mean? That basically means whenever you have a really big candle and then immediately left to it is a smaller one. So this would be an example of a bearish engulfing and or institutional candle. Okay. Now, what I like to see is I want to see the biggest and best looking institutional candle on the highest time frame. So say, for instance, I were to be able to keep flipping through these time frames and I ended up finding a better looking, a bigger institutional candle on a higher time frame, then that would be the time frame that I would use it, that I would utilize it from. So since I'm on the 4 hour, I'm going to be utilizing the 4 hour. Now, I want you guys to notice, as I've spoken on before, I'm not necessarily, I don't do a whole lot of top-down analysis. I can do the rest of my analysis once I figure out, is this a trade I can even think about taking? Then is there a candle that's going to make sense for me to get in on if I decide to actually get inside of this trade idea? So obviously what I ended up finding out was the answer to that was yes and yes. Now, if I, do a little top-down analysis, you guys can see what overall, from the 4 hour time frame, at least, this is a bullish market. But if we were to look just from here, right, from this peak that was created at about 91620 all the way down to this low that's about at 81140, you can see that the market has obviously been bearish. We even had it to where the market gave an impulse move, it gave a retracement, and then what did it do? It gave the continuation. So in the context of actually what we're looking at for this setup, even though overall it's a bullish setup, temporarily in the structure that we're looking at, this is actually bearish. So that does actually make sense with us being able to take a trade, even though a lot of times you guys will see, I do take a lot of reversals, okay? So the final thing that I need to do, okay, is a couple things. Now, one thing I like to utilize that maybe a lot of people aren't privy to is I like to be able to utilize these EMAs. So these EMAs come from a strategy called the DeLorean. Won't go too deep into that, but ultimately you have one, you have two, you have three primary indicators. You also have this yellow and red, but we're not as much focused on that. We really want to focus on the dark blue, the white, and the aqua. So basically the aqua is going to represent a time frame that you can look at as like an equilibrium. It's kind of like the market is always going to come back to the aqua. No matter how far the market gets away from the aqua, in a lot of instances, it will pull back essentially before it continues or just breaks through the aqua and continues dropping, okay? So whenever I see an opportunity that from the candle I'm looking at entering, there is a lot of space that I have to be able to trade to the aqua. For me, that gives me more confidence to be able to say, okay, if I win or lose this trade at the end of the day, it's all about, did it make sense to take? And if you come back and look at it after the fact, is there anything you could have did differently? The biggest thing I pride myself in is whenever I take a trade, I'm not going to say never, but for the most part, whether I win or lose, it's honestly not really anything I can come back and convince myself I would have done something different. Okay. So as you guys can see, I actually placed my second take profit down here because it's basically around the aqua. Now, finally, you guys know, whenever I do my 50%, it's always to be able to find the equilibrium of the candle. So my 50% is going to be based off of Fibonacci. As you guys already know, it is a custom Fibonacci to where you guys can actually customize it and do it like this. I specifically use this for candles as far as the one that I'm looking for. Other people could use this for other instances. So the 50% of the candle is going to be the equilibrium. That's basically like the sweet spot, the soft spot, the most sensitive spot. The market doesn't always have to pull back to the 50%, but in a good amount of situations, if and when it does, it is going to give you the best risk to reward. Now that you guys can see, this is going to be the zone that I want to be able to enter from. Okay. So this zone right here, which is going to represent the 50% to the opening of the candle, what I want to see in every situation, given, the situation makes sense based off of the size of the stop loss, which is 34 pips. My maximum stop loss is 40. In this kind of situation, all I want to now see is this. I want to see some sort of retracement to then give me the drop. So what I'm now going to do is I'm going to press play and I'm going to see if that is what actually happens. Okay. So as you guys can see, whenever I stop the replay tool, you guys can see at this moment right here, this is whenever the market triggered us into the trade. Okay. Now from the entry, it put us about 13 pips in drawdown, but we had a comfortable 34 pip stop loss. So we weren't tripping. And now if I actually let this setup play out, you guys can see it smacked our first take profit, which at that point you should know, okay, I'm going to take partials. And then after I take partials, I'm going to then, adjust my stop loss to break even so that it is now a risk-free trade. So I made money when it came to this green line. And unfortunately, it ended up reversing, but unfortunately, it's not the good word, right? Luckily, not luckily, thankfully, there we go. I was able to secure profits and then it came back and hit my break even, but I wasn't tripping because I made money and I didn't lose anything at all. So with that being said, guys, is another example of a setup that I did take personally. And it's going to be more examples of this moving forward in the future. So what I would like you guys to do is if you guys are actually able to come watch this video, you learned anything, you maybe knew something that I taught already. You're like, okay, I already knew that, but it's nice to get a refresher, or you just want to send it to somebody else. Make sure y'all go ahead and hit that subscribe button, right? Tyree Samuels is a name that you guys are going to remember over YouTube and in the investing community. So I want you guys to get adjusted to it, okay? And then finally, as usual, I would strongly and very much appreciate if you guys can leave a comment, right? Like, and then go ahead and hit that thumbs up for your boy, because you guys already know my motto. I'm going to see you guys at the top, not from the top, because the bottom is way too crowded. See you when I want to be you. Peace.